Good afternoon and welcome everyone. I know we had a good lunch. We had a slightly delayed lunch, so we're also expecting a few more people to trickle in as we begin with the discussion. So we'll be talking about deconstructing the impact of inclusive finance services and products. These will be learnings from the development sector, a development finance ecosystem. I'd like to invite Kezia as the moderator for today's session. If you could join me on the stage, please. Kezia is the Deputy Vice President at Sambodhi. Our first panelist for today's session is Bram Span, the Regional Lead Asia at Rabo Foundation. Our second panelist for today is Aparna Khandelwal from India Climate Collaborative. She is the Senior Advisor of Climate and Finance. Our third panelist today is Amrita Sarkar from Shell Foundation. Amrita is the Business Development Director. Our fourth and final panelist today is Amit Arora from World Bank. He's a Rural Development Finance Specialist. Please welcome all our panelists and the moderator with a round of applause. Everyone who's present in the room. Thank you. Thank you, panelists, for being here. Kezia, over to you.
Thank you. If you can come to the front, I think that'll be good. And we can have a more warm and close conversation. But welcome to this panel, and I am happy to have our partners here today with us. So we're going to spend a little bit of time talking about the learnings that we have from each of the programs that we are looking at, our portfolios, etc. Since yesterday, I'm sure we've been talking about what inclusive finance would mean, what are its modalities, etc. But I think today in our panel, we'd like to unpack a little bit of what of those programs, right? So deconstruct some of the learnings that we have from these programs that we have been engaging with over the years from a different point of view, from philanthropic point of view, from donor perspective, from program and impact strategizing point of view. So I think that's the agenda for today, and I'd like to start right away with the conversation. The first question, broad question that I have for all of you is, when we talk about inclusive growth or inclusive finance or global inclusive finance, what is it that each one of you are doing in your portfolios, in the work that you have been, and with whom, and how is it going so far? And then maybe we can deconstruct the so what after we hear from all of you on that. So I'll hand it over to Bram first, and then Aparna, Amit, and Amrita. Yeah.
Yeah, thank you, Kezia, and thanks for being here, also with the friends from the sector. So what we do as Rabo Foundation, we are the foundation of Rabo Bank. 125 years back, someone decided to set up a cooperative, or an FPO for that matter. This was Raiffeisen, and he actually already had a sort of an impact angle towards his work. He grouped farmers together to have more market power, to build a thriving business, and that was the start of Rabobank actually. They grouped together with Raiffeisen and Boerenleenbank, coming together with as a Rabo. And in the 60s they become a full-fledged bank. And with those roots as a cooperative, they started to look back and think, okay, what is the thing that we can do back as a bank to the society? That's when, in the 70s, Rabo Foundation was set up to make sure that the vulnerable people, both in the Netherlands as abroad, are being supported in different ways. So since the 2010s, we started to act more as an impact financier, whereas previously we supported farmers through grant making programs. Um, yeah, since 2010, more or less, we are active in India. We have a little bit of a different model in India, where in other countries we support farmer cooperatives, agri-enterprises through debt instruments and TA facilities. In India, we have seen that that is not so much the right model to support farmers, smaller farmers. So in that sense, we have built a program around financial institutions that can do the work for us in terms of financing agri-enterprises, FPOs, AgTechs. So the financial inclusion part for us is mainly having the local capital, which is the NBFCs or the financial institutions, to work with our partners, and those are the FPOs and the AgTechs, to make sure that they are doing the groundwork. We provide them credit guarantees. We have recently done also some direct lending, but credit guarantees is actually something that we do most in the country. So that's it for now.
Sure, thanks, Kezia. I represent an organization called the India Climate Collaborative, and it's not directly a foundation or a donor, but essentially an ecosystem enabler. And what we do is try and unlock a lot of philanthropy for catalytic climate opportunities in India. And what essentially that means is that our targets beneficiaries are essentially vulnerable populations, vulnerable to all the climate risks. So it could be farmers, it would be women, it will be people living in the coastlines. More than 75% of the districts in the country are climate hotspots, climate vulnerable hotspots. And therefore, it's important that we work towards looking at solutions which preserve both lives and livelihoods. And in that sense, we direct a lot of philanthropic capital to spaces which need to scale, and solution spaces which need to scale. And therefore, there's no one approach that we follow. So if a space requires credit guarantees, we'll enable that. If a space requires just getting the stakeholders together because finance exists, but it's not currently accessible, we'll do that. If a space just requires getting data on the table, so different roles that philanthropy can play, we enable that because philanthropic capital is the most agile and risk-taking capital. So yeah, happy to talk more about programs later, but that's what we do.
Okay. Hi, this is Amrita. I represent Shell Foundation. So we are a 25-year-old philanthropic organization. We started work in India for the last like 20 to 25 years. And in spite of being a philanthropic organization, we put a commercial lens when we look at impact. So for us, the North Star is raising incomes while reducing emissions. We feel we can be more additional with certain kind of customers, and we essentially work with that port of call being the first thing to look at for us. So we are essentially customer centric. We feel that three sets of customers which we have identified. These are smallholder farmers, transporters, and micro entrepreneurs in India and Africa are where we can be most additional to raise their incomes while reducing emissions globally. So we look at innovative clean energy solutions / energy efficiency / cleaner energy solutions, or any innovation that can remove the requirement of energy altogether. We are happy to support such innovations, enterprises, programs to scale it up. Now, how do we scale it up is being catalytic in nature and inviting other participants like us or larger institutions that have the capacity to put in more financing towards these sectors. So we want to understand how our capital can be leveraged to increase the amount of capital that is available for these few sectors. So in terms of financial inclusion, I think the first aspect in terms of looking at this customer segment with that lens. Second is in terms of being gender intentional in all the work we do. So any of the intervention we do, we believe that something which works for a certain section should work for all. Otherwise, it's not sustainable. any kind of intervention we do has to be commercially sustainable, because if we only look at philanthropy, that's only a limited pool of capital we are looking at. And for any solution to attract that kind of commercial capital, we need it to be sustainable. So we only look at solutions that we feel that, that needs that risk support for us to come in. We support it to some extent, and we feel that we need that plan to look that after some time it doesn't require a support at all. In terms of instruments, given the philanthropic nature of our capital, there are restrictions as to how we can operate in India. Till now, we have looked at concessional debt. We have looked at guarantee structures, in terms of engaging with an entity. And of course, grants is something which is available. As Aparna also mentioned, I think one of the most important factors that comes with philanthropic capital is the flexibility and the risk-taking nature. And therefore, we are able to support enterprises and innovations that require that risk support. So maybe elaborating later when it comes to that. Thank you.
Thanks. I work for a development bank, try and do in combination most of the things you spoke about, but somewhat at an ecosystem level. As a wholesale institution, we're not at the front end as much. My portfolio and the role is largely focusing on bridging the gap that exists, specifically rural, more vulnerable section, and gender focus. Now, this could be agri, this could be SME, this could be any other area.
Thank you for the brief introduction and talking about your portfolio. And while all of you were talking about the work or the portfolio, one question that came into my mind is there is innovation, that the work that is being done right now is innovative, but innovation can sometimes have competing strategy, it can be competing to sustainability, right? How do we then talk about sustaining the impact of these program is the question that I have. But before that, as a predecessor, maybe we can talk about what is the impact that you want to see, and some learnings around, okay, through this program, these are some things that we absolutely want to see, and these are some ways that probably we can find a blend between innovation and sustaining those impact. So Bram, you want to go first?
Yeah, sure. Yeah, I think if you look at the impact sector as a whole, innovation is key to the work that we do. Usually it's perceived high risk. And with high risk comes, I think, also innovation, because people need to push boundaries. If you look at the beneficiaries that we have, from our perspective, it's always impact that needs to be there. So we are a foundation, we have a high risk mandate. So the beneficiaries that we target are usually the ones that are having difficulties in availing loans, are having difficulty in getting the right training or capacity building. But from their perspective, it's a matter of looking at viable businesses, looking at getting a certain income, looking at making a livelihood. And usually there can be a mismatch there, because we have that impact mandate, we are trying to solve something from an impact perspective. They just want to survive or making a viable business. That's also what we see when working with actors in the sector. So what I just mentioned, we are providing credit guarantees, for example, to financial institutions. We have a high risk mandate, but with our credit guarantees, we try to make up for the risk gap that they have in their own system, right? So if you look at NBFCs, there may be a little more risk taking, but if you go to a mainstream bank, they have their standard operating procedures, they have their standard frameworks that we need to push through if we want to make something work. I think that is something that, yeah, is definitely one of the challenges if you look at sustainability of programs. Once our credit guarantee, for example, expires, then what is being done with that specific beneficiary of that specific organization? So what we do as an organization is that we always look at a certain exit strategy. So we come in at a certain point in time, We, for example, provide a 50% credit guarantee, pari passu, and then we try to, for example, decrease the guarantee percentage over time and have the financial institution to build a track record with the organization so that in the end they feel comfortable enough to, without our support, lend to that organization. And that, I think, also makes the relationship sustainable for the longer run.
So, Aparna, coming to you, you talked about climate hotspot and the kind of facilitation work that you do, and your impact, I presume, is at the ecosystem level. So, there, if we try to unpack it, what does it look like? And again, these are all time taking. It has long gestational, period. So, how do we conceptualize that, and how do we ensure that it is sustained over time?
Right. I think first level of or the ultimate impact that we always seek to achieve is that philanthropy is not required, right? And that's success then, whether it takes 5 years, 10 years, etc., whatever. But that's the ultimate goal, that you are able to catalyze the ecosystem in a manner that market forces take over, and different stakeholders are then collaborating, and you don't need philanthropy to orchestrate. A lot of the work that we do, impact can be defined in multiple ways. So suppose, just taking on Bram's example, if they have a credit guarantee, impact in a program could also be, have we increased access to debt, leveraging that credit guarantee? Have we looked at, have we been able to reduce the time it has taken to, again, access instruments which exist? Have we been able to create market for those solutions for which debt is existing? And at the end of the day, how have we been able to play the role of an orchestrator, such that the different stakeholder categories who need to be involved actually do get involved? I think one of the key challenges we face in any solution space we look at is that we have brilliant actors, but they're all working in silos. And therefore, while there's a lot of work happening in policy or there's a lot of work happening in technology, they're not talking to, say, the financial institutions. And therefore, it takes time to break those silos. And yeah, a lot of our effort goes in two things. One, curating coalitions of actors, and then two, helping break those silos.
Amit, I'll come to you. Just want to hear from you examples of which you must have observed or experienced where long-term dependencies or risks like that we talked about is mitigated through some strategy or some innovation. If you have some examples around that.
Sure. I'll give this example, which is of graduation financing, missing middle, gender focus. We all know microfinance model is very well established, be it on the public sector side, SFG, or the JLG-led microfinance model. However, when these women want higher ticket loans, they hit a roadblock. They may be taking, they would have taken 3, 4, 5 cycles. They're running a business. Now they need, say, 200,000 rupees loan. It's very tough. Especially unsecured. So we've been trying to work with government to see how we enable these pathways, which are sustainable at some point of time. One example is we worked with one of the state governments to have a platform where,
I think you need to raise your mic a little.
yeah. A platform where lenders financing and the subsidy/grant from the government gets blended at a platform level, and there is a phygital architecture, which is a pass through, because given this is rural, this is nano, lenders may not be able to reach those geographies on scale. So there is a public good architecture which is built. So with experience, this hopefully becomes autopilot and self-sustainable. The actors try and come together, which I see happening, because it's the first cycle which is the most difficult. If you cross that cycle, then it becomes autopilot. You have credit bureau footprints and so on and so forth. So we have learning which shows that this is possible, doable, and is self-sustainable. And that's one example that we've been trying to crack the problem.
Amrita, coming to you, especially talking about transporters, because that's one of the customer portfolio that you're looking at, and especially income uplift for them, right? Um, I know that we have been talking about how to look at impact uplift for them, what are the measures that we could probably use, but just wanted to hear from you on Shell Foundation's thought process on what does uplift look like for a transporter, and if we are to kind of look at what timelines are we looking at, how, for example, if we are providing them access to finance to buy a two-wheeler or a four-wheeler, what does the horizon look like for them? When are we going to see green shoots, or talk a little bit about those?
Sure. Yes, so transporters is one of the segment which we feel that at the nexus of income upliftment and clean energy solution and works best in terms of our interventions. Now the ecosystem in India for EV transition is quite mature, which was like in 5 years we have seen so many NBFCs which are captive in nature now have come forward and looked at lending towards e-wheelers, EV two-wheelers and three-wheelers. How we started off is in 2000, between 2021 to 23, we have supported through concessional loan a couple of NBFCs, they are Refin and Mufin, which again look at two-wheeler, three-wheeler EV financing. For us, there was a lot of intentionality in what we are doing because we wanted to have a sense of what is the income upliftment potential, given that one of them is a tech-enabled platform and therefore data is available to us to see, what is the cycle that, that is usually involved in such loans. So usually these would be like a 24 to 36 months loan in case of two-wheeler, three-wheeler. The kind of borrowers that Mufin and Refin were looking at were, of course, across the kind of spectrum over and above what usually a Shell Foundation would usually look at in terms of beneficiaries. For us, the beneficiaries are defined as somebody who is yet to achieve that living income status in their respective regions. From our learnings from these two interventions, we launched a larger program because we still felt there was a gap in the larger banks and NBFCs coming forward and lending in this segment. The reason being that asset risk, technology risk, and therefore added to that a customer risk layer, which increases the risk premium that is required. An intervention like this may not really, I would say, bring down the cost of financing yet available to the customers, and therefore, though affordability is my end goal for them, but that is not attainable through, say, a concessional loan, which we don't want to do right now. We would rather want to enable the market to increase the adoption through these kind of interventions. So we created a loss facility, which has acted as a second loss layer, which was co-created with SIDBI and Shell Foundation, which then encouraged financial institutions to lend to this segment. So we just started with this facility last year in 2023 towards the end. We have seen around a 9-month cycle in terms of after it was established. We still are yet to get the data points from there, but there is a lot of traction. And the reason where a larger program makes sense is because you need that kind of a push, you need that kind of a marketing and communication to also go, that there is a support that is available holistically for you to come up and lend at this space. And hopefully this is a larger program in the sense it's a longer one. So it ends about in 2030. So we have cycles of data availability on understanding the repayment of data, as well as what kind of leverage of external capital is also coming to this segment. And we expect that to happen over the next couple of years.
So you touched upon one topic, which is around having the availability of data, or knowing the evidence, or knowing the context, building on the information that we have. So just to carry forward that element, Bram, I want to ask about the learnings that you've had, because the program that you talked about, the Guarantee Fund, is in its 3rd or 4th year. So if you could reflect on some of the learnings, what has worked for you, and some things that you probably want to know but not able to kind of cull out of the learning so far, or there's a gap, challenges. If you can talk about that, be good.
Yeah, thanks. You're, I think, pinpointing the program that we have with Shell Foundation and IKEA Foundation. It's a program that we started in 2021. It's called the COVID Response Fund for Agriculture Transition. And it's a guarantee provided by USDFC, 50% pari passu to 3 MBFCs in India. The guarantee has been made possible by 3 foundations, which is IKEA, Shell, and Rabo Foundation, where we take care of a certain expected loss of the guarantee. With that expected loss, we also build a TA pool of funds from which the MBFC partners and the beneficiaries or the borrowers of the MBFCs can make use, so that they can address these end users. Some of these end users are, for example, FPO finance, AgTech finance, post-harvest loss reduction, renewable energy. Yeah, it's now I think the 3rd or the 4th year in its lifespan, and it goes with ups and downs, I must say. In the beginning, the utilization of the guarantee was really good. MBFCs were working hard on building portfolios. The TA piece picked up recently as well. We have somebody as MEL consultant to actually handhold us for the full lifespan of the program, which is 8 years, which makes it really interesting to derive results on an annual basis. And what we have seen so far is that yeah, the structure works. So the guarantee towards the MBFC work in terms of getting them to other geographies, getting them to other borrower types, getting them more towards agricultural or deeper rural spaces. But what you also see is that it's difficult for these organizations to really move the needle to a certain extent. So I believe that if we can have a more thorough approach and handhold them a little more with the TA pool of funds, so getting them more towards a certain borrower type that they're not really comfortable with, but we, for example, or other organizations, I think that can really push the needle.
Amit, I'd like to ask a similar question to you. Bram kind of hinted, saying that there is a push and a pull sometimes. You know, you need to find the right nail. And and my question is, we talk about social impact, but these are all financial instruments, right? So there is also this measure of financial success that needs to be brought in, right? So how do we come up with or how do we balance the financial performances, disbursements, return on equity, etc., with the social aspect, the social impact of it? Disbursement, volume, and values, they are one kind of matrix. But whether that is working or not, or producing social impact, that's a different matrix altogether. So in your experience, or the work that you're doing, how are you kind of blending these two together, and if there are any examples of it?
Tough one. I'll give an example. And Rabo has been a partner there. First of all, having the right mix on day 0 by design doesn't happen more often than not. What you design is not how it is going to pan out, especially, you have the metrics which are not aligned for all of us as institutions. Everybody has priority of, what I want to see, what you want to see, and what you want to see. You only hope that this will work out. One example, about 6 years back, we were starting a project with government of Jharkhand, where we were saying we will make these SHG women. These are all tribal areas, Jharkhand, and all women's FPO, which was much before 10,000 FPO program, relatively unheard of, and so fairly daunting a task. And it's not an easy geography, but design happened, and as the FPOs were formed, the mobilization happened. The natural question was how to enable financing. The first cycle had to be grant, but how do you ensure that this doesn't get frittered away? So with Rabo's help, we developed a matrix which was somewhere in between rating and grading. MCRIL was the partner who did this, and this was a template which had to be calibrated as we moved on. And we said, okay, we're giving grant money. This is government project, but you have to ensure that the business happens through your banking system, because it's easy to, do in cash, especially the geography and this segment. And you have to use this money, convert it into a fixed deposit, and still take an overdraft from a bank against this money. You know, we could do that, and 5 years down the line, with a lot of stakeholders coming together, some element of digitization, all of these women-led FPOs, membership is about 25,000 plus, have formal commercial loans, and they have a cumulative turnover of 100 crore plus rupees. I couldn't have imagined it on day zero, but with stakeholders coming together, patient capital, investment in various other things, all of these metrics have fallen in place. There is a commercial angle, self-sustainability angle, there is an impact, social, all women's, and these are all marginal segment. And we are also linking them to the markets. So it needs, short point is, it needs a lot of coordinated efforts, and it needs a lot of patience. Uh, and at times it doesn't happen also.
And I think I'll come back to Aparna on the same question, since Amit talked about need for collaboration, partnership, coordination, and that's primarily what ICC also does. Moving forward, where do you see your investments going in or your efforts going in, and what part or what kind of collaboration that you're looking forward to when it comes to kind of amplifying the impact that we are seeking to do?
I'll add one more point to what Amit said,
sure.
and that so while we require coordination, we require everyone to be patient, we also require agility, because like he said, we can't get the perfect design on day one. Also, different stakeholders, and in this case, maybe different donors, have different goals. And so first to get them on the same table is extremely difficult. Going forward, I think, and just coming from the, yeah. And I was coming to that. Going forward, I think what we are specifically working on is to get the right stakeholders on the same table, because a lot of times there are very set pathways, and what we need to break is the notion there is only one way to reach the goal. I think there are multiple approaches to reach the goal, and we should be flexible enough to try those pathways, because we won't always succeed. So we've tried things, we've failed, and therefore, how can we use philanthropic capital in a different way to ensure we see better success? I'll give you an example. We were trying to scale rural energy access through decentralized RE solutions. And the initial hypothesis was, this is a very new sector, so have a credit guarantee and get the financiers interested. We worked a lot on business models, on mobilization and all, and we realized that it didn't work. It didn't work because everyone in their calculations had assumed a 30% government subsidy, but that subsidy was back-ended. And therefore, no bank was willing to give the loan because the subsidy was back-ended. So we realized what we actually needed was less the guarantee, but more bridge financing for the government subsidy. But it took us 2 years to realize that. So I think that agility and coordinated action is like extremely important even going forward. And the fact that even donor education, in the sense of changing the approach. Not everyone is like a Rabo Foundation or a Shell. A lot of donors still come with a lot of traditional mindset of just asset funding, right? They still want to see what can be seen, and therefore fund tangible things. But here we need philanthropic capital to fund the intangibles. So a lot of donor education is still required, and we'll continue to work on that.
Amrita, I'll come to you. I know when Shell Foundation kind of conceptualized programs, and we've been part of some of them, there's a lot of emphasis on customer feedback as well. We talked about stakeholders, orchestrating stakeholders together, but customers also are stakeholders, right? So I want to know a little bit about, how customer feedback and data collected, primary data that has been collected with these customers are being used in program strategizing. Yeah.
Yeah, thanks. So the point is that we in 2022 to 23, we had the rejig of our strategy, and we put the entire emphasis on customers. So the starting point of any implementation or program is the customer feedback. And when I say feedback, since we have done some work on the clean energy side, we have realized that there are certain solutions probably which are suited for the customer and will lead to an income increase. So those are, we have done a Powering Livelihoods program along with Wilgrow, which was supported by UKFCDO, which is also another funder for us. We have realized that there are around 12 to 13 mature technologies that are available in the DRE space that have scaled to a certain extent, and that will always find a audience for taking it up, right? So for those technologies, then you can come up, say, okay, financing is a problem, then you can probably provide a guarantee to financiers who can then lend to that segment. But there are also certain segments that we are unsure of whether that will take up, that the market is ready for the adoption. We are not sure of that. So in those cases is when you would want to see the testability of that particular solution or a product with the market. So then we will probably partner with an entity which is providing a solution and wants to test it with that market. So recently we are in the process of partnering with certain entities which are trying to test certain cooling techniques in India and Africa. And these cooling techniques are, in fact, doesn't require any energy intervention. So these are bereft of any energy intervention. These are just innovation in the cooling space. So cooling as a problem statement has been identified, and that has come from the customer feedback side. That is sector agnostic, and within India and Africa, across smallholder farmers, micro entrepreneurs, there's a lot of stress due to the heating conditions that are available in the environment, plus the food loss and the food waste which is happening on the farmer side. So cooling is a problem, the solution being some of the techniques which we want to test out. But whether those techniques are viable commercially is something which we need to test in the coming few months. And therefore, this is working as a pilot right now. Whenever we are able to find a couple of solutions, is then we would need to find larger distribution partners. In India, for example, it could be one of those cooling giants which are already working in the space to take and test it with their customers, because they are working in, say, workers in the factory. There are furnaces where these entities, they have the supply chain there, can test it out with that market. So this is the pathway we would follow. But for any new solution, the feedback starts from the customer side, the problem statement starts from there, and then we devise the solution.
I have one question which is out of the list that which is beyond what the questions that I've shared. When we are having this conversation right now, and we talked about our respective programs, what we're looking at, I want to reflect a little bit on. We talked about silos, but what are the common grounds that we have in all of our programs? If you can think about it and maybe reflect on it a little bit. Silos, yes, we acknowledge, we know that there are silos, and we all need to be brought in the same level playing, or even have a same set of understanding when it comes to this particular aspect. But what are the common grounds that we can leverage on as partners and in the ecosystem?
Yeah, I think everyone definitely has this role to play, and as we're sitting here, I think we're all looking at a sort of same goal, which is making impact for our beneficiaries, whether that can be social enterprises or farmers. And what we feel in our programs, for example, the program that I just explained, where we have public sector, private sector, government, even sovereign international development banks. What we saw actually is that within every of such organization, there's a champion. Like there's a champion for a partnership, there's a champion to go that extra mile for a collaboration. Um, Otherwise, we could have never pulled it off. Everyone can say, okay, we have a credit guarantee, you have a loan, so we reduce your risk and disburse the loan. Yeah, we have seen that it's not that easy. It's not like that. So within every organization, you need a champion. And what I feel is that also high risk, for example, with our target group, is also a bit of a perceived high risk. What we have seen with our credit guarantees is that we have now, I think, issued some 120 guarantees over the last decade or so. There are maybe 10 claims at max that have been come to us. So that's quite low. You can sometimes also say this is even lower than the regular bank, Rabobank. Um, so especially when working with the private sector, I think you need a certain champion that can bring this towards the end, because from an impact perspective, we are all always there. We always have the same mindset. We always try to make something work. And coincidentally, I read this morning that if you look at general behavior of a person, then pessimism is usually seen as the smarter person. So if there's some event happening and someone says, ask starting questions or looking at it from a negative side, in general, people say, okay, that's a smart person. He's asking questions and try to understand what is happening here. So if you look at the stock exchange, for example, if things go north, everyone is riding the wave and no questions asked. If things go south, all of a sudden everyone's asking questions. And I think that is exactly what is happening now in our sector as well. If you talk to a bank, you get 100 questions about why would you go for this target group. Well, we are being that positive person maybe that says, okay, we want to go that extra mile and make it work. But I think that is something that needs to click, and we always look for that positive person within such an organization to get our transactions going at least.
I'll keep it short. I think the thing that we can leverage, the common thing is actually the intent. Players exist, institutions exist, and they are willing to come together because they all have a common intent. So I think we should just leverage that to do bigger and better things.
Yeah, I think being agile is one of the most important things. I think one thing which I wanted to mention earlier probably is what we have also done is to take a pause sometimes, and along with the rapid prototyping which we internalize in terms of doing smaller projects, we also need to take a pause and learn from our some of the things that have gone wrong in execution and share that feedback with others. So many of the times, even when me and Bram, we discuss on calls, we see many of the times we are looking at the same goal, but probably we are running so many parallel programs, and that is true for many other organizations in the same sector, that probably we could have told that, okay, this way we have already done and this would not maybe work. So sometimes sharing those negative feedbacks as well in terms of organization or the pathway. So yeah, I think that piece I wanted to share. Thank you.
Nothing to add. The goal is very common, and we are, as you know, everybody is saying we're working from different angles. So, or probably all we need to do is just walk the extra step to yield some space and find common grounds, which often you'll find. It's just that there are institutional baggages which often don't allow us. If as an individual, as you said, you're willing to take that extra step, and which is not prescribed by the institution, and then see how it goes, more often than not, it'll yield positive results, and that's what is probably required.
Thank you so much. Before I open the floor for questions, I'll just want to kind of give a brief summary of what I am taking away from this conversation. Perspectives vary, yes. Impact goals, there are common grounds, there are diverse impact grounds as well. But what matters is that somebody needs to be a trailblazer. That's what Bram kind of hinted towards, and everybody agrees, right? And for that, I think we need agility, we need responsiveness, and we need to have an intent. And we're dealing with a sector which is highly diverse, and for us as evaluators, we also find it difficult to kind of have a set standard matrix or a kind of, isolated matrix to look at all of these. So we need to expand our horizon, come up with questions which are sometimes not commonly accepted, and just understanding between stakeholders to create that feedback loop, to create that, to pause, reflect, learn from all of this. And thank you so much for sharing your stories with us today. I'll open the floor to the audience. If you have questions, maybe we can take one or two. No? All right, we did right on time, even though we started 15 minutes late. Thank you so much.
Thank you, panelists, and thank you, Kezia, for moderating this so deftly and gently at the same time. I'd like to request all of you to step forward for a group picture. Ahead of the tables, please. As a token of appreciation, please accept these bags. Thank you, audience. You've been very patient and very engaged in this session. Everyone looks very rapt right now. We have the next session beginning in about 5 minutes' time. We're looking at customer-centric impact assessment. Stay back or take a quick bio break. We begin in 5 minutes at about 2:42 or so. Thank you.